Welcome back to Credit Series Part 2, the 5 C's of Credit. The 5 C's of Credit is a general framework that mortgage lenders use to evaluate a borrower's credit worthiness. The character of a borrower is assessed by numerous factors, including the stability of their career, willingness to provide disclosures, and whether they are able to demonstrate an overall healthy and responsible credit profile. A borrower who honored and paid off their financial obligations is deemed to be more creditworthy than a borrower with poor repayment history. Capacity refers to a borrower's ability to repay their financial obligations. This is determined by examining a borrower's current income, employment, and existing debt load. Mortgage lenders want to see that a borrower's income is sufficient to service their financial obligations and will assess their gross and total debt service ratios. Capital refers to a borrower's assets, including real estate holdings, investments, and savings, as well as the amount of money one will be using as a down payment in the case of a purchase. A well-capitalized borrower with a positive net worth may signify to mortgage lenders they have the wherewithal to service their financial obligations and may have a lesser chance of defaulting. Collateral refers to the asset that the borrower pledges as security in exchange for the mortgage lender lending them money. The mortgage lender will assess the value, condition, and marketability of the collateral, which in the case of real estate lending is the property. The stronger the collateral, the greater the security the lender has in the case of default. Although some use conditions as one of the 5 C's of credit, I prefer credit or credit history. This is somewhat interchangeable with character, but this process has a more in-depth assessment of the borrower's history, including their credit score, credit utilization, the number and types of credit accounts they have opened and closed, the frequency the borrower has applied for credit, and history of judgments, collections, prior foreclosure, consumer proposal, or bankruptcies. Thanks for tuning in.